I presented a paper on the financial crisis in Iceland and pretty much how it was dealt with and many difficult issues that are connected to that. There are several lessons that we draw from this, including how you should be careful when providing emergency liquidity assistance, how to resolve banks, how to deal with the aftermath of a financial crisis of this magnitude. And yeah, the whole purpose of this paper was basically to try to learn lessons from the Icelandic financial crisis. Well, the Icelandic economy has recovered remarkably well since the crisis, so it's a good question. But there's still, I believe, a mindset that there are mistakes in the past that need to be avoided. Risk-taking can become too excessive in many cases. So a lot of things have changed, both in the financial markets, the supervision of financial markets, etc. Examples would be, for example, that the Icelandic banking system is not as international as it used to be, and its size is, let's say, more manageable in comparison to the size of the economy than it used to be. And also that supervision and prudential measures are, let's say, much more active than they used to be prior to the crisis. Well, the Icelandic crisis, or the Icelandic part of the international crisis, I'd rather say, is a bit unique in that you had almost the entirety of the financial system collapsing simultaneously. So it is a financial crisis or banking crisis of a scale that you rarely see, and hopefully no country will see in the future. And that entails certain specific issues and problems that a country needs to deal with. An example would be that Iceland very early on, in collaboration with the International Monetary Fund, to establish capital control, so basically restricting a large part of capital flows to and from the country, to try to stabilize capital flows and stabilize the market for the currency. This is probably only relevant in extreme cases like this one. But in some other respects, we have lessons that are relevant for any banking crisis that we might see in the future. For instance, how you try to assess the quality of credit, and how you sort of try to be more forward-looking and try to, let's say, be more critical on the business models of banks as a supervisor. Almost surely, but this was primarily a trying period for the whole country and even beyond the country. I suppose that it is always good to learn lessons, but this was very much done in the hard way, of very hard-earned lessons. Well, it's very, very important because the world is changing very rapidly, and if we look at the case of financial markets, they are ever more complicated as time evolves, and we need to be updated in not only sort of how things appear to work, but what is likely to happen if things change. And this is very much the focus of research today, so try to identify vulnerabilities, try to develop policy options that might be preferable to the options we have chosen so far. Well, I think it's essential if research is to be helpful or useful, or that it draws from actual world experiences, and so it's only relevant if it's based on data and actual things. But that is on so many levels. Of course, there's also research that is very basic or is very theoretic. That's also quite valuable. But in my experiences, I think the most valuable research that I have had the opportunity of benefiting from is something that is with a close connection to actual events.